What's going on, guys? Welcome back to the channel. Welcome back to another video. We at the end of another week, and today we're going over the price action and the moves on US 100 Nasdaq. So let's get right into it. So we really traded right inside of the range of last week's candle. So the previous weekly low and the previous weekly high was here and here. So we didn't really create any new price action in terms of creating any new structure. So what basically happened is that we had a huge sell-off from last week, and we kind of gapped up inside of this range, and we just was back and forth for the entirety of the week. Now we closed the week above here. We didn't close the week above the previous high, and we didn't close below the low. What we did do is close the week above the previous week open, which would have been this. So the previous week had opened right around here, sold down, closed down here. So this week, truth and in fact, the candle should have started right around here, and all of this should be weak, but there's a bug with this indicator that I'm currently working on. So the candle really opened here. We traded up to this high, traded back down to this low, took out internal liquidity, and we closed up here. So looking at the price action, I'm thinking, because we close up at this high here, I'm thinking we could continue higher, targeting back this all-time high here. We could have a little pullback here, and then now we still have equal lows down here because we didn't take out this low, and we have this one now. So we have three lows down here that we could potentially hit if we're going to get bearish price action. But currently, for me, using my rules of structure, this is the current level that's maintaining the uptrend. So until we break below here, so we need a break below here, strong close, and then we can return to retest, and then we can form a new level. We could go all the way back up to here after breaking and then come down, but until I really get a break, then I still have a bullish bias. But then again, I trade the current price action. I'm a day trader, so whatever the market is doing on that particular day or in that particular session, that's the kind of trades that I'm going to be focusing on. So we could go either way, but because we close up here, I'm thinking this is some type of reversal to bring us higher. If we had closed below here or closed below, if we had wicked up and closed down here, then I would think in lower. But let us see what we get going into next week. So on US 500 is almost the same. We just didn't close above the open of the previous week. On Nasdaq and US 30, it's the same thing. We didn't close above. We actually took out this liquidity down here run internally, but like I said again, is this current leg maintaining the current structure. That's what I'm using. So on this we actually took out the low. We took out the lower on ES, and we even came back and took it out down here. And like I said, this candle should be here rather. We traded up, so it should essentially look like something like this. So we open, went up, came back all the way down, and we close here. So that is what took place this week. Now I track all these three indices because of how I trade. Sometimes I look for SMT, or sometimes there's a little indication that shows me, okay, this one has run the low, this one might not run the low, or this one might run the high, and I'm thinking we could reverse. It's just something developed over time, and that is how I look at the current price action. So if you look at the current monthly candle, we did quite a bit of manipulation now, so we could continue higher. If I should pull up my seasonality charts, let me see. Seasonality for Nasdaq. The month of October is normally a down month, and the month of September, but we had an up month this time, and this is going back for a couple of years. But this is just the return. This is just showing you the average return. So it would normally be that return there, and the seasonality is showing me that we could have the pullback, go up, pull back, and then continue higher into the highs. This is for the election year. This is for all election year. This thing is from last year, but the aggregate cycle, this one, it should continue up. It should continue up. I need to find one that's for the general price action. Let me see if this one is a bit different. But yeah, guys, so that's what I'm thinking there. On the 4-hour time frame, this is what price did. So we traded down. I need to see where we open. So we open around here. Previous daily close. Yeah, we open right around here. Traded down, went back up, traded back down into this discount area. So on this leg of price action, down here is discount, here is equilibrium right here, and here is premium on the 4-hour time frame. What I need to do is find a better color to properly identify these levels on the chart. So that is what we did on the 4-hour time frame, and on the daily again, see, we close at these highs right here. Same thing on this one, and same thing on this one. On the 1-hour time frame, we did the same thing, it's just a little bit more refined. So we closed yesterday right around here. Where was it? We closed the previous day somewhere. Hold on. We closed somewhere right around here. Yeah, I'm trying to figure out the day. Yeah, this is where we close down here. I took a buy after we did some sweep and came back up, but didn't follow through, so I get stopped out because I moved up the stop. But it was just a tester position, so we came down, sold off back into the discount level here, and then we came all the way back up to this order block. I sold it here. Didn't get much more follow through, but I didn't get the best of entries either. And we came all the way back down to here before running price. Because we had to run the internal high, which would have been the same day opening price. That's the high that we ran. Let me see if I can get the. Yeah, man. So here's a much better picture. So the previous day open here, we had run above here before we came down, and that is the reason why I took that trade. I saw the indication here of a reversal, and I took the entry, bringing us back down here. And had I been on the computer, because I was at work all this time, I could have caught the buys here, and in the morning these buys came in nice after running the lows. The buys came in nice from the the after from the macro right around, I think it was 550 to 610, or 610 to 650 to 710, somewhere right around here. And had you got an entry down here, you could have been in this trade for the entirety of the day. So even using this 1 hour chart, if you got an entry after running the lows right around here, you could have held this trade for the entirety of the day, and this would have easily been 540 points. And this one and this one, it would have been 120 points. So quite a bit of range on these markets, and that's what tends to happen when the market volatility picks up. So Trump has been tweeting back and forth with the tariff situation and all of that, and it's been bringing some life back into these markets. Except for the fact that it's a bit choppy, but nevertheless, welcome the volatility. If you know what to look for, then the volatility is a good thing. Let me see if I can change this to historical. Save. Just resaving the template so I can see the structure levels. As even though this showing me change of character and all of that, I just use it for to know when the liquidity is run above these highs, because these are internal highs here. Some of them are daily highs, some of them are internal highs. And see here, we properly run this high right around here, this low right around here perfectly, and we went back up. So yeah, man, so see it showing me now. That is the price action on US 500. Let's get into the lower time frame now. Let me see. Do I need to reset this template as well? Alright, so looking at this, this is where I took my trade. This is where I took my trade. Like I said, we traded down. Tried to take a buy here because we had, after we had the gap up, had this small gap here. I took a buy from the previous day because we had all ran some internal lows. So I was thinking we could go back up, but I just decided to exit because it was the Asian session. I was doing it on my phone. So price came up, ran this internal high here, and we just sold off for the entirety of the Asian session. Came all the way down to London session. I think London session opened somewhere around here. This not showing me the correct price, the correct time session, and we came all the way down and went all the way back up. And this would have been a beautiful entry, like I said. Right, this reversal came right inside the macro, and we just went all the way up. After running these highs here, I saw the opportunity for a sell. I missed the initial entry, which would have been up here, so I would have taken more positions, and I would have used a somewhat bigger lot size, and I could have caught the sales coming down here, and then this buy would have been nice also. Once I get the reversal indication, these buys came up nice here, come back down to retest here, and running these highs. So that is why we close at this high. Now looking at this price action, like these are some lovely opportunities to capitalize on when you know what to look for, and these reversals turnarounds come right inside the time, so the timing is very important. Let me try to pull up the chart, and let's see, that's yes, here is it. So see Asia, this was a nice sell opportunity during Asia, right down here. I'm trying to bring up back this thing. So nice sell opportunity during Asia. This would have been right around 9 p.m. Sold all the way off. You could have targeted previous day low, and it would have been New York low as well. Came back up, didn't get much of a bounce, traded back into a level right there. Once you get the entry pattern right inside the 150 to 210 macro, sold right back off, and we ran the low from all the way over here. So this is the low from, this would have been Tuesday's low. So this would have been a nice trade as well to capitalize on. Nice trade. And the London silver bullet also gave us a nice entry, just a continuation, no pullback, just a continuation entry all the way down until we run the lows, and then see it was actually 403 to 430 macro, so I am wrong on the timing, but yeah, this was inside of London. After running these lows, we get this entry inside the macro, and you don't necessarily have to take the entry inside the macro. You just need to wait for the correct the correct liquidity to be run. So we had already run the daily low, previous daily low, which should have been right around here. And depending on your entry criteria, this would have been a beautiful entry for me right here inside the macro. And this trade you could have held for the entirety of the day. So this also provided an entry inside here, and we got an entry here. The reason I wouldn't have been selling anymore is the target would have been hit. So we'd have run the previous daily low, as well as we are in discount price. So like I showed you on the 15-minute chart and the 1 hour chart. Let me bring it up. So like I showed you, it would have been the 1 hour. So yeah, like I showed you, this would be showing me discount down here, equilibrium, and premium. So down here, I'll be looking to be done with the selling. You don't want to be trapped down here selling, and you don't want to be trapped up here buying. Once you recognize where you're at in price, then you can know how to navigate. So came all the way down. This reversal happened in the London session. Bring it up. London session reversal after I ran the daily low, and this entry, like I said, this was one entry using this order block right here after we established that the liquidity was run several times. And then now this was another entry right around here where it put stops below here, and even inside of the 650 to 710 macro right around here, this would have been another entry as well. This was another entry to take us higher inside this 750 to 810. And then as soon as New York open, boom, we would be targeting the highs now. So New York open, right down we came, right down inside of this order block here. We actually tested it 2 times, and this would have been a nice entry right around here, right around 9:30. Expect New York to manipulate up and then down. So the target would have been this high right here first. This would have been Asia high, and then the new target would have been up here, which would have been the previous New York session high. And when you know to look for those levels, then you can identify where price will tend to attract to, as well as on the higher time frame, I had the target of the previous day's close, which would have been right around there, and I was having this target as well. I know this was a bit extreme, but it could have possibly got there, especially when the market is volatile like this. You have big swings going in both directions, so we could have gotten all the way up here, which would have been the previous day's high. So that was my narrative right there, and we didn't quite make it up there, but we went pretty close, and there was enough opportunity to capitalize on the trades. Now this macro did not provide a proper entry except for the short, and the short was the one that I took after. So I entered, my entry was not the cleanest actually, so this was the trade that I took after we ran this high. This showed me indication of a reversal because I saw that we weren't going higher, and I decided to just risk And as soon as we started to break down, I actually sold it somewhere around here, but I was using the 15 minute on my phone, and I was targeting the lows here. Didn't quite make it down there, but I decided that let me just come out because I'm not able to monitor this thing. And one of the thing I was looking at is that if because I think I had gotten out somewhere around here after pull up. But what I was looking at is that we are still bullish, and the objective for the downside had already been met. So I don't think we would have went any lower. But I just decided that this could have been a nice little reversal trade. A couple points. Nice couple points scalp. Let me measure it from, if you gotten in from around here, this would have been 230 points. This is a nice trade. Nice trade. 230 points. On a regular day, you don't get this level of volatility. And then now we came into this order block here, demand level, and this would have given you a nice entry, taking us all the way back into lunchtime. So anywhere down here could have been a nice entry to take us back up. And then we had a reversal, and right around after lunch you'd have gotten another entry opportunity right around here to take us into the PM session. 150 to 210 brought us all the way up, and you would have targeted this high, and then now the previous highs. Didn't quite make it up to the the previous day's high. Like I said, this would have been all the way up here, but it was a Friday, so most of the time there were enough opportunities over here to capitalize on to get us back up to here. So this would have, you most of the traders would have already been done for the day. But if you're just monitoring price and you're just getting on, once you're able to read the narrative, you will be able to catch some decent trades going back up. And you just, as I say, using the highs and the lows and understanding the premium and discount level. So you don't want to be buying at the top here. You want to be buying below equilibrium, or as close to discount as possible, with the indication that price is going to go higher. And this could either be for swing trading, day trading, scalping, or even if you're just investing for the long term. You want to try to buy at the lowest or at a discounted price with reason, and try to target the highs. And it's the same thing or the opposite for sell. So that would be it for today's review. I don't need to go over S&P 500 and US 30 because it's pretty much the same price action across all these pairs. And gold, we actually reversed. I think we ran out of steam and reverse. So I was looking at this. I think I took a trade last night, not last night, on Thursday night. I got home from work and I saw the price action. I saw that we had came down into a bit of a discount, ran some internal lows, and we had tapped into a zone that I had here. And I just decided to take the buys, set my stops here using small risk, and I targeted all the way up. I think I got out somewhere around here before price went up to run the highs. Got out right around here, somewhere down here. It was a little scalp as the price was moving very, 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 very volatile. So I think I took 2 entries. I entered and I exit, and I realized we get a nice little pullback, and I re-entered again, setting the stops below here, and I just targeted the highs. And once you know what you're looking for, you can do it like that. I've been on these charts like for years now, so I know what to look for. Didn't take any trades in London because I was exhausted. I didn't get to wake up. So I missed the alarm, so I didn't trade London. But we came up, ran these eyes, did a transition. Well, we didn't make it quite back up to the previous daily high, but make it close enough. And I guess you'd have probably a SMT between this and silver. And this thing has been exhausted. And also we hit a whole number, which would have been 4,380, and we just slowly melted back off. So we sold in London. London macro gave us an entry all the way down, coming all the way back down, and you would be targeting the lows. So this low, Asia low, and then this would have been another low from the previous day, and the previous day again coming all the way back down. This would have been the previous session, London session low, and we sold all the way down. And this would, by this time on the 4 hour or the 1 hour time frame, we would have been in discounted prices. And this thing, as I say, it's been going up and up for the last couple of weeks. So it's been just going up. So by the time we got down to here and you realize we took out this low, we took out a few of these lows, it would have been time to get out of the trade and look for reversals. So you realize every time we ran a low, we tapped into something that gave us a reason to reverse, or not necessarily have to reverse, but you get a little pullback. You can capitalize on them if you really know how to, but came all the way down, and this would have been a nice indication to buy into the close. That is it for this video. I'll catch you guys on the next one. Peace.